Good day for the market, and Janet Yellen overnight in the US set a good scene, ensuring easy money for longer for financial markets, and that saw a positive start to the Australian share market. Not only that, we did see some good numbers coming out during our session. The China trade numbers, we saw both exports and imports increasing by just under 1%. Now, the market had been forecasting and expecting a decrease in both the export and the imports numbers. Of course, last year's numbers, though, have been distorted by some of those fake invoices to try and bring money into China or out of China, depending on what you wanted to do there. So taking those numbers with a grain of salt, but we also saw customs data, which saw the iron ore import numbers coming out for China. Month on month, we saw an increase of 13%, so good news for the iron ore miners there. And year on year, we saw a gain of 24% there. So while we are seeing the iron ore prices relatively low at the moment at about 105 US a ton, it does look like demand still relatively strong coming through from China. And then, of course, to top it all off, we saw job numbers here in Australia. 14,200 jobs having been created, almost double the consensus, and that follows on from a very positive month the previous month. So not surprising to see a very good session on the Australian share market. All sectors higher with just one exception, that was the consumer discretionary space, and a number of companies also reaching all-time record highs. We saw Covermore reaching an all-time high, Amalgamated Holdings was another one, and we also saw Oil Search reaching an all-time record as well. On the flip side, though, not a good day for Boart Longyear, reaching an all-time record low after coming out with an update, and also a multi-year low for the likes of Lynas St Barbara Mines as well on the market. So all in all, a great day for the market and some all-time records reached as well. I think if you have a look at China, I think the economy is still fluctuating and still trying to deal with some of the imbalances in terms of the market. As I mentioned previously, these trade numbers have to be taken with a grain of salt. We know that officials are trying to clamp down on the shadow banking industry as well as those fake invoices. So we did see quite a bit of fake invoicing distorting the numbers last year. And remember, this year, the market initially started off 2014 forecasting more than 7.5% for growth for China. The consensus view now is around 7.3% growth. So we're still seeing a downgrade to growth expectations. And until we see that stabilise and start to rise, I think you're still going to see a lot of nervousness around China. It is one of the cheapest markets in the world. The Shanghai Composite has been a terrible performer over the last few years. But this is a market that's just gone from cheap to cheaper and cheaper and cheaper. So until we see stabilisation in those growth expectations, I think you can expect some more volatility for the miners as well as commodity prices, and at the moment we're still seeing a downgrade to those growth expectations. I think looking at this stock, there's two things that would be most positive for share price. One is an exit from its UK operations, and second is a vast improvement in terms of those UK operations. Also, one thing to watch out for is the fact that we are going to see a change in CEO. Andrew Thorburn will be taking over the reins, and sometimes when you do see a change right at the top, you see a clearing of the deck. So I wouldn't be surprised to see some more provisioning related to that UK business as well. Now, the UK business, it was a better business. The UK bank cash earnings was up by a massive 121%. That was offset mainly due to costs related to conduct-related selling. Now, this was selling insurance in regards to some of the loans, so there was a cost factor there of £128 million, and that also saw the headline expense number increase by more than 11%. But also the cash earnings from its real estate book, the commercial real estate book, which has been so troublesome in the past, was only a loss of £7 million. Now, it was still a loss, but nowhere near the almost £150 million loss that we saw in the previous corresponding period. I think the UK business was a positive surprise. What was a little bit of a negative was the results coming through from the Australian business. Now, at the other banks, we have seen a very strong wealth result coming through, and we didn't see that coming through for NAB. In fact, if we have a look at the wealth business, including the MLC business, we saw a flat result there. We also saw margin pressure coming through with the net interest margin at 1.91%. That was down 9 basis points, and that's because NAB has one of the, actually the lowest home loan rate out of the big four. And so a lot of negatives in terms of that Australian bank, but I think the market's looking forward, and the possibility of spinning off that UK business would certainly be a positive for the share price.